Good morning and welcome to 7 at 7, your daily news capsule to get you clued in for the day. It's Friday, November 8th, and I'm your host Anirban Chaudhary. It's been just a couple of days since Donald Trump's return to the White House, but a significant impact is already beginning to show. Just after his win, the net worth of the world's 10 wealthiest people surged by $64 billion in a single day. This was according to Bloomberg data, and it was in fact the highest one-day increase in the 12-year history of the Bloomberg Wealth Index. This record-breaking boost was driven by a market rally on expectations that Trump's policies will favor businesses, ease regulations, and cut taxes. No prizes for guessing who the biggest gainer was. Elon Musk's wealth jumped by $26.5 billion. The other gainers were Larry Ellison and Warren Buffett. On the other hand, Trump's expected stifling of China has already got its first victim. Shoe brand Steve Madden is set to reduce its sourcing from the country by up to 45% due to anticipated tariffs under Trump's proposed policies, said Global News reports. According to an earnings call by its CEO, more than half of its business will be impacted if the US increases tariffs on China, an increase that could be as high as 100% under the Trump regime. Now, even as fears of severe trade barriers loom large, China's exports have surged by 16% year-on-year, reaching a 2-year peak. Despite potential US tariffs on critical exports, China's global demand for electronics and machinery has spiked. This growth, of course, faces uncertainty as trade policies may shift under Trump's administration. But meanwhile, Chinese media reported that the country's president Xi Jinping Thursday sent a message to Trump saying that Beijing and Washington must find a way to get along. In fact, here's the latest example of just how critical US-China are to global trade. Japanese car maker Nissan announced a reduction of 9,000 jobs and a 20% cut in global manufacturing. Reason? Declining sales in key markets, especially China and the US. The automaker's strategy, of course, highlights overall pressures in the global auto industry from economic slowdowns. With overall losses mounting, Nissan plans to streamline operations, focusing on profitable segments. From China to another of India's neighbors and its ongoing tussle with an Indian company. Adani Power has over the last few weeks cut half of its supply to Bangladesh. Reason? Unpaid dues of 7,000 crore rupees from the financial beleaguered country in terms of electricity bills. Now ET has learned that the Bangladesh Power Board has issued a fresh letter of credit worth 1,450 crore rupees to Adani Power for continuous power supply. Remember, Adani Power supplies nearly 1,600 megawatt power to Bangladesh from its coal-fired plant in Jharkhand. And it has said it wants more repayments before it begins to restore power to the country. Here's news about another perennially angry entity. The Enforcement Directorate, or ED, recently conducted searches on 19 Amazon and Flipkart vendors across 5 Indian cities, investigating potential FEMA breaches. Authorities suspect these platforms may have provided preferential treatment to certain vendors disguised as independent sellers. Alleged FDI violations could impact the e-commerce giant's operations in India if non-compliance with local regulations is confirmed. And finally, it's curtains for India's oldest private airline. The Supreme Court has ordered the liquidation of Jet Airways after its court-appointed new owners, the Jalan Kalrock Consortium, failed to implement a court-approved resolution plan. Despite a proposed $578 million plan to revive the airline, the consortium did not even pay the initial tranche of $42 million. Remember, Jet Airways has been grounded since April 2019 due to cash and debt issues, and this liquidation will end its 5-year insolvency case. That's it for today. As always, grab your copy of the Economic Times and log on to our website for more news and analysis. This is your host Anirban Chaudhary signing off. Have a good weekend.